Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Nikola stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a small cap company, 447 million market cap. They're trading at 33 cents a share and they have 1.4 billion shares outstanding. Nikola sells electric battery vehicles and hydrogen fuel cell electric vehicles to the trucking sector. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Negative free cash flow every single year. They still don't generate that much revenue. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's also negative every single year. Revenue is the sales for the company, 0 in 2021. Then they got 50 million in 22, down 28% to 36 million, down again in the trailing 12 months. So that's not a good trend. We estimated 4 years of future free cash flows. We also estimated a terminal value to all cash flows past year 4, that's negative 2.3 billion. We discounted those numbers back to today using weighted average cost of capital. We get a value of the company of negative $2.6 billion. We divide that by 1.4 billion shares. And we get a calculated stock price of 0. They're trading at 33 cents, so it's a sell according to the model. So I can't find any scenario where the company will be profitable. There are 27 companies in the same industry as Nikola, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend 85 million in capex. These are the investments in property, plant, and equipment. So if you buy a factory, the cost of that factory goes in the capex. Debt to equity ratio 0.5. For every dollar of equity, they have 50 cents of debt. They have the worst free cash flow number out of anybody on this list. They ranked 14th in market cap, so they broke the top 15. Price to book below 1, so the company's worth more in bankruptcy than operating. We can't look at that PE or price to free cash flow. They're trading at 14 times revenue. They're really not generating much revenue, only 33 million, the least on this list. The reason their 5-year annual revenue growth rate is so high is because they started with 0, and I guess the percentage is extremely high. So the average percentage growth is 156%. If you have $1 in revenue and then next year $10 in revenue, that's like a 10x growth, 1,000%. And if your friend had 100,000 in revenue and he went to 200,000, his growth was 100%. So you grew at a higher percentage, 1,000% versus his 100%. But I'd much rather have his revenue of 100,000 to 200,000 than yours from $1 to $10. If you put $10,000 into this company when they started trading, you would have been at $60,000 at one point, but if you still held on, you lost almost everything, down 97%. Let's take a look at their first quarter results. They continue to execute on their plan to ramp up hydrogen fuel electric vehicles. They wholesaled a whopping 40 FCEVs. Wow, 40 cars in one quarter. To date, they sold 75 fuel cell electric vehicles. 75! They expanded their brand Hyla in North America. They opened a refueling station in Ontario, another refueling station in Alberta. In Q1, they completed their first delivery of remediated BEV, battery electric vehicle. I'm not too sure why they had to remediate these cars, but I guess something was wrong. But they finally fixed the problem. Their Hyla team is working on its hydrogen highway plan, and they remain on track, no pun intended. Previously, they committed to 9 additional Hyla refueling stations in California. That was by the end of 2024. Now they're expecting to provide 9 hydrogen fueling stations by mid-2024 and 14 by the end of the year. They maintain their dominant market share in HVIP vouchers for Class 8. These vouchers make advanced vehicles more affordable. They talk more about the remediation down here. We continue to prioritize returning BEVs to customers and dealers and now expect to complete remediation of these units by the end of this year. In the first quarter, they produced 43 trucks. They shipped 40. Last year, they produced 63, shipped 31. So they shipped about 30% more than last time. That number has to get a little higher. Probably every hour, Toyota and Honda ship this many cars. Revenue 7.5 million, down from 11 million. A gross loss of 58 million. Operating loss 145 million. Their shares outstanding went from 550 million to 1.3 billion. So they're doing a ton of dilution. Here's their income statement. Revenue 7.5 million. All the expenses tied to generating the 7.4 million are 61 million. All the expenses tied to generating the 79,000 revenue are 3.3 million. So a big gross loss. R&D 39 million. That's down a lot. SG&A 48 million. That's up a little bit. They spent 2.3 million of interest on their debt, a lot lower than last year. And they have a loss per share of 11 cents. Last year was 26 cents. Here's a breakdown of their stock-based compensation. SBC is given to employees to subsidize their salaries. So the employees actually making the cars are in cost of revenue. They're at the factories. Their SBC was only 300,000. The SBC given to employees working on R&D is 2.9 million. But the executives get most of the SBC. And the executives are in the SG&A, 5.6 million. So SBC was 25 million last year, now it's 9 million. Here's their balance sheet. Assets of 1.1 billion. Liabilities of 570 million. Assets minus liabilities equals equity, 586 million of equity. They raised 3.8 billion from selling their business. They lost 3.2 billion from running their business. Let's look at a statement of cash flows. Operating cash flow, negative 115 million, better than last year. They spent 16 million in CapEx. They sold 21 million of CapEx, so they have a cash inflow of 5 million. In their financing section, they had a cash outflow of 5 million. They didn't add any debt in the first quarter. EBITDA is almost identical when you compare 1Q23 to 1Q24. Let's look at the stock on Simply Wall Street. Its last price 36 cents, half a billion market cap, down 30% in the past week, down 72% in the past year. The company got acquired by a SPAC, and it looks like that SPAC started trading in mid-2018, and SPACs start at $10. It looks like in 2019, the SPAC announced it was going to acquire Nikola, and it shot way up. In mid-2020, the stock was $70, but it never hit those levels again. Some real big dips. It did shoot up at points, like in November 2020 it was 19, then 35 a few weeks later. But overall it just goes down. The peak in the past year was $3.40, then it fell to below $1 in September 2023. You could have made a lot of money if you bought and sold at that time, but you can't hold too long, because the stock just keeps going down. Simply Wall Street does not value this company. 6 analysts priced this stock at $1.40. The revenue forecast is really bullish. 120 million this year of revenue. Next year, 420 million. After that, 1.1 billion. So if they hit these targets, the stock may go up a lot. The purple line is their free cash flow, which is always forecasted to be negative. They were debt-free in 2019 and 2020. They added a little debt in 2021, and then a bunch of debt in 2022. It peaked at 361 million. Now it's at 240 million. But their equity is always higher than their debt, so that's good. And this green line is their cash. They do have more cash than debt, but they're burning cash every quarter. The CEO's salary is $400,000. Total compensation $9 million. Tenure as CEO less than 1 year. The CEO bought 1 million shares recently, but then there's a lot of insider selling in the past year. The general public owns 65% of the company, institutions 32%, private companies 3%. The Norwegian bank, Norges Bank, owns 8% of the company, then Vanguard BlackRock. Citigroup owns 0.6%. Murray Asset, 1/3 of 1%. SocGen, 0.28%. And their employee count was 256. It peaked at 1,500. Now it's down to 870. And the ticker trades on the Nasdaq, Bern, Mexican Bolsa, Wiener Bursa, London Stock Exchange, Deutsche Börse, Zicha, and Bulgaria. Let's learn more about the history of the company. Nikola was founded by Trevor Milton in 2014. As of 2016, the first 5,000 Nikola 1 hydrogen trucks were slated to be built by Fitzgerald Glider Kits in Tennessee. In 2019, Nikola acquired a 400-acre land in Arizona for $23 million. The company said production was to start in 2020, and they should be making 35,000 to 50,000 trucks per day by 2023. In 2019, the company held the Nikola World event in Scottsdale, Arizona. The two-day midweek event included a public demo day to show off the Nikola trucks. In March 2020, the company announced its plan to merge with Vector IQ, a SPAC, special purpose acquisition company, run by former GM Vice Chairman Stephen Gursky. This resulted in the combined company being listed on the NASDAQ with ticker NKLA. Nikola began trading on 6/4/2020, a day after the merger was completed. By June 9th, the shares had more than doubled. At the end of June, Nikola started taking reservations for pickup truck the Badger, even though a prototype had not been shown to the public. The company was valued at $13 billion in August 2020, and the company only had $80,000 of sales at the time. Half of those sales were from the installation of solar facilities for CEO Trevor Milton. In September 2020, Nikola and GM announced a partnership. GM acquired 11% of the company. Also, GM agreed to use its manufacturing facilities to begin production of the Badger, as well as supply fuel cells and batteries to Nikola globally. After this announcement, Nikola stock jumped 50%. In September 2020, short seller firm Hindenburg Research released a report accusing Nikola of being an intricate fraud perpetrated by Trevor Milton. Nikola showed a video of its truck in action, but the truck was just rolling down a hill because it didn't work, which means the vehicle was moving by gravity, not by the technology Nikola put into it. The stock fell 10% that day, and GM stock fell 4%. The following day, the stock fell another 36%. Nikola said these claims were false and misleading and threatened legal action against Hindenburg. Trevor Milton said those who were short-selling Nikola stocks are fan of rival company Tesla and are anti-Nikola or paid attack accounts. In response to the release of the Hindenburg report, the CEO of GM said her company conducted appropriate due diligence before its deal with Nikola. By September 14th, the SEC started looking into the situation, and on the following day, the Department of Justice began an investigation. A week later, founder and former CEO Trevor Milton resigned. Nikola stock came down 20%. Then Nikola issued copyright takedown notices targeting critics on YouTube who used clips of the promotional video in which Nikola One semi-truck was rolling down a hill. People were saying Nikola's action is an abuse of YouTube's copyright takedown system. On September 23rd, BP backed away from a partnership to develop hydrogen refueling stations for Nikola's EV trucks. Nikola's stock fell another 25%. That partnership was cited as a critical component in Nikola's business plan for its electric vehicle trucks, powered by hydrogen fuel cells. Nikola planned to announce the BP partnership days after the GM partnership. GM started backing away from Nikola and said it would not invest any more money into the company. GM also said they will not provide fuel cell technology for the Badger. Subsequently, Nikola canceled production of the Badger. In December 2020, Republic Services said their partnership with Nikola will be terminated. Republic Services is a waste management company, ticker RSG, market cap $60 billion. The two companies had previously agreed to develop zero-emission garbage trucks in August 2020, including the production of at least 2,500 to 5,000 trucks. Nikola's shares fell another 10%. Analysts called the canceled order a short-term setback, which allowed Nikola to channel more focus towards the core of the business, the production of semi-trucks designed for long-haul transport. In February 2021, the company dropped their power sports unit, along with any plans they previously had to produce any of the power sports concept vehicles they had shown. They were really marketing an EV jet ski, but it looks like that got the kibosh. After the indictment of Trevor Milton in July 2021, the company said they will remain focused on growing the company's electric trucks business. And they didn't even produce 100 of those vehicles at that point. In December 2023, Milton was sentenced to 4 years in prison. In August 2022, they acquired battery company Romeo Power. In August 2022, they announced they delivered 48 vehicles to dealers. with revenue of $18 million. In September 2022, all 93 of its battery electric vehicles were recalled due to an issue with seatbelt anchor assemblies. In June 2023, a Nikola truck caught fire at its headquarters due to a leak in its battery pack. In August 2023, a second truck malfunctioned, which led to the recall of all their trucks, 209 in total. They also suspended sales of their battery electric trucks until a repair would become available. A third truck caught fire in September 2023. 4 days later, a fourth truck caught fire. In May 2018, the company filed a lawsuit against Tesla seeking $2 billion in damages, alleging the infringement of some of their patents. This lawsuit is still ongoing. In May 2018, Anheuser-Busch placed a purchase order for 800 leases of the hydrogen-powered truck versions. So that's the end of the video. Let me know what you think. Thanks for watching.